Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Oana.
Okay, so today we're going to do our mid-month update
Okay.
for the Las Vegas real estate market.
That's because you guys want so many updates, so we're doing them.
And the market's changing rapidly. This update will probably surprise you. As you know, we've been very bullish on the real estate market. And there have been some short-term changes because of fear in interest rates. Now, the first slide that we always do is this market action index. We're going to put this up. This is the most telling, and this is why. Now, do you see that 44? That's the market action index. Over the last couple months, this has been dropping by like 8, 9, or 10 every month. So it went from a strong seller's market, it swung back rapidly. In the last 2 weeks, this has only moved 2. And you can see in the last month, it moved 9. So we had 2 weeks where it swung 7, and now it only swung 2. It's still a slight seller's advantage. But that needle swinging slower tells us it's going to stop at some point. And every year this happens this time of year. We go from a strong seller's market to a seller's market. It goes back. So what's your interpretation of this going from, we saw this thing plummeting and it went from 44 to 42, and that's like the brakes are coming on right. the downfall.
Right. So last 3 months, basically, everybody panicked. So between all the sky is falling people and the interest rates and the uncertainty and inflation and all the gloom and doom, everything just kind of accelerated, right? But now things are slowing down, which is fine, and it's pretty normal. Things are going to kind of slow down and kind of stagnate a little bit by the time we get into the fall, and then at the end of the fall, beginning of winter, things will pick back up again. That's what always happens. And it's interesting because I was watching some other YouTube people that you guys send me links to, and they were saying basically something similar to us, saying that, look, all of this is going to slow down, and then it's going to pick back up in the winter, and then in the spring it's going to go gangbusters like it usually does, because this is the cyclical part of the market, right? It's kind of what we expect. What I think is interesting is that sellers have kind of figured out that if they wanted to sell their home for an outrageous amount of money, that ship has sailed, and they're just not putting their house on the market. Okay. So I think that's something to kind of keep in mind. What's inventory like?
Okay, inventory, that's next slide. Now, we tried to break this into market segments, and it did, but it just took the market segments and divided by quarter and put them on one line. So when you look at that scale on the left, you have to multiply that times 4. So in the city of Las Vegas back in 2019, exact 3 years ago today, we had what was probably 1,600 times 4 just in the city of Las Vegas. We have about half of that still. Okay, so inventory is climbing, but we're still not to where we were in August 2018. What's interesting is over the last week, tracking just in the MLS numbers, the inventory is radically now starting to taper off. This is kind of a big surprise because over July and August, beginning of August, it was taking off. But now what we're seeing is this trend line where it's starting to push down. Right. And then I saw somebody else's update where they said, oh, well, it was flat over the week. And I don't know what data that was exactly. But I looked in the MLS and saw that it's like it's increasing very slightly now.
Right, which is typical because, look, 2 things. One, sellers have said, hey, if I can't get a ridiculous amount of money for my house, I've got no interest in going anywhere, so I'm not even going to list my house. And then the other thing is we are pushing up against school starting, so families are less likely to want to relocate because they're kind of getting settled in with school. Elementary schools in Clark County in general, schools have just started this week, and that also impacts people's willingness to sell their homes.
Price per square foot, this chart is in the 4 quarters of the market. That blue line's the top quarter. As you all know, the luxury market is a bit more volatile. It also changes more every year. If you look back every year, this time it starts to taper off, goes back up. It did it last year, it did it in 2020. It's doing it more now because we have some more stuff going on, actually. If you look at the rest of the market, which is the bottom 3 quarters of the market, then you see it's basically leveling off there. If you look from August of 19 to August 2020, it very slightly increased. Even into April of 2021, it slightly increased. Then it took off. So what this is an adjustment.
Right.
And it's happening. And the reason why it's freaking people out is because this adjustment is happening at a time when inventory goes up, list price goes down, price per square foot drops, and it's making it look worse than it is. But
Right.
if this were to happen 6 months from now, you wouldn't really see anything. This adjustment wouldn't change anything. It's the same reason why we didn't see anything happen when interest rate, because remember, interest rates started going up in December. And they went up January, February, March, and guess what happened? People were still buying, and home prices were still going up. Even though interest rates, if you were buying a house in March, you were already almost at 5%, okay? But people were still buying. So this is a combination of two things that are happening in the market.
Right. The other thing is, I realize that the luxury market is more volatile, but consider that that pool is really a different kind of pool. And luxury is pretty new to Las Vegas, so it's going to have its growing pains.
Yeah. This is median list price. This is dropping as well. Most of that is because of the change in the numbers of luxury homes, not just the percentage drop in the high end of the market, but the numbers are so much less. So what that means is that substantially drops the median list price. Because now, remember, the median list price is half the sales above, half the sales below. If you chop out a bunch of sales out of the luxury part of the market, the top quarter, then let's say you just take out 10% of those sales. Well, then the median price drops 5%. And that's not 5% of value. That's 5% of the homes. And if 5% of the homes is 7, 8, 9, 10%, it looks like prices dropped 7, 8, 9, 10% when maybe they didn't. That's why you have to be careful with median.
Right. Yeah. So look, the market is actually pretty chill as far as I'm concerned.
Yeah.
It's kind of staying the same, and in some ways it's actually settling down because we are not seeing continued inventory growth at the pace that we were seeing a few weeks ago.
Okay. This is my favorite chart. Now remember, the market action index, which is the first slide, it takes into account a bunch of factors. It's just not looking at price or whatever, because those by themselves can be misleading. Well, one of the things it also includes is median days on the market. Now, median days on the market is the number of days when half the properties sell, okay? So I'm gonna put the slide up, median days on the market. You can see, this is broken into quarters for all of the quarters of the different market. You can see that the median days on the market today are still lower than they've ever been in the last 3 years. They're lower than they were in 2021, about the same as they were in 2021 when we had a super hot market.
Right.
This one is super telling. Why is this happening? Why are we seeing the list price start to decline, the inventory starting to climb, which normally happens, but then median days on the market are not really? You would think this number would shoot up.
Well, I don't think it's going to shoot up because buyers are still out there. They're still
Okay.
buying homes, but they have more choices.
Okay.
And they're being treated more fairly. I mean, they don't have
Okay.
to waive inspections. They don't have to waive appraisal. They can have their due diligence at a reasonable pace. It's a much more normal and fair market.
Okay.
But like I've said before, the pretty houses are selling. And by pretty houses, I don't just mean that they're attractive, but they're in good condition. They're well maintained. You know, they're houses that don't need a lot of TLC, right?
Yep.
So those houses are still selling. The houses that could use some TLC and maybe haven't been that well cared for, those houses are either not selling, they're being taken off the market, or they will be taken off the market, or they are being sold to investors who are going to do some minor renovations and then either rent them out or put them back on the market at a higher price.
Okay. This tends to go up through the fall, median days on the market. We do, though, remember, we have a lot of the rising inventory were people that were going to sell anyway in the fall that sort of got ahead of themselves. A lot of those people called us and we listed and sold their homes already, right? We did that in the spring. They said, hey, we're moving anyway. We're going to move in the fall, but we just want to sell it now because we don't want to, we heard some bad things may happen. And you still have those people that's happening. What does that look like then as we move into the fall? Those people that were going to sell then either A, already have their house on the market or already sold.
Right. So those people either have, like you said, they've either sold or their house is on the market. So that inventory will not be joining the market because it's already happened. So I think what's going to happen in the fall is you're likely to see inventory numbers actually drop.
Okay.
I think that's going to be interesting if they drop because, like you said, that inventory kind of got sucked into an earlier time frame.
If you look at luxury homes, that it got at the peak this year, it was at 75 at the beginning of the year.
Mm-hmm.
It dropped down. It is starting to climb a little bit as the other ones are climbing. They do this every year, as you can see. They climb up, they go down, they climb up, they go down. Is the buying cycles happen because right, people buy in the beginning. They really start buying December, January, February, March, April. They're buying at the beginning of the year. They actually shut off in the summer. People would think the summer should be hot, and it is hot in Vegas, but people, especially in Vegas, aren't running around in July, August, September buying houses. They come back after the summer's over.
Right, yeah. Look, it's hot even for locals, let alone people from out of the area, so people tend to not do that. Plus, summertime, kids are on vacation. Nobody wants to lug kids around to look at houses. Those of us that have done it, we would probably advise our friends not to do it. It's difficult, and the kids don't have fun, and the parents don't have fun. So you may as well have some fun when you're spending such a big chunk of money. So that's part of the reason why the summer slows down as far as buyers coming to market.
Okay. Now let's do Juana's prediction. We have inflation numbers starting to come down.
Mm-hmm.
The inflation numbers are teetering. They're lowering. They tend to lag, meaning the Fed takes action, and then this cumulative effect of quantitative easing stopping and the Fed rate increasing over time rate, and usually when they start dropping, they continue to drop. So we have this inflation getting under control. We did have 2 quarters of negative growth, which is a recession. But then if you look at the total picture, we had a ton of consumption. We had a supply side problem, right? Where companies couldn't produce goods and services. That was the problem. It wasn't a problem where people couldn't afford the goods and services. We couldn't produce them, which contributed to the inflation, right? Mm-hmm. We have potentially now, once the interest rates get under control, we'll probably see the Fed start to reverse its policy. They usually have about an 18-month window, and then they try to bring down rates to keep growth happening, right? Mm-hmm. So let's look a year ahead. Everything that you've seen, how do you expect in your mind when you close your eyes to see the next year play out in Vegas in real estate?
I expect to have a good market next year.
Define good market. Good for who?
I think it's a good market for everybody.
Okay.
And I'm not being Pollyanna about it. By a good market, I expect a market with reasonable inventory levels where buyers have choices, where homes stay on the market long enough to be properly marketed and for buyers to see them, but not so long that sellers get stressed out.
Okay.
So that's what I mean by a good market for everybody. As far as appreciation is concerned, I know that's what everybody's looking for. I don't have a crystal ball, but I do expect some nominal appreciation. I don't expect the 18% that we saw last year or anything like that, but I do expect something reasonable. This is Vegas, so anything's possible. But seeing maybe a 4% appreciation that next year, that wouldn't be out of the realm of possibility. I know that there are lots of other people who are predicting lower than that, and maybe even
minus 40%, that they would crash 40% next year.
Maybe even a little bit on the negative. But I tend to be rather bullish on Vegas because Vegas continues to grow. And the reason we continue to grow is because people keep coming to Vegas, keep moving here. So long as people keep moving here and Vegas is growing and the economy is not horrible, there's no reason why Vegas shouldn't have somewhere between 2 and 4% appreciation next year. And for those of you that are off the 18% appreciation, sorry to burst your bubble, but remember that real estate is a long game. And over, the course of owning a property for 10, 15 years, you will see some pretty decent appreciation. You just won't see it, every month or every year.
When you look at these numbers, it does not take into account Caesars and MGM, which are the two largest employers on the Strip, had record first and second quarters this year. They had a record first half of the year. Vegas had a record number of tourists in. There were a record number of jobs created. And they set a record of like 30 straight months of,
I think it was 18 months straight of over $1 billion.
18 months straight of over $1 billion in gaming revenue,
Right.
which has never happened before. It's a record. They're probably who knows how long that'll go.
Right. And then the thing to keep in mind is that there are so many different projects on the books here in Vegas as far as new businesses, new employers. We're looking at attracting a Major League Baseball team here. We're looking at attracting maybe an NBA team,
Yep.
maybe a soccer team here.
MLS.
And all of that brings jobs, because it's not just the players and everybody associated with that organization that come to town. But remember, there are all these businesses that kind of are that surround these enterprises that also come to town with them, and that's just more and more people, and that's a lot of growth. And you think, well, you know, how many people is that? 200, 300, 500 people? Well, yes, but like I said, that's just the core organization. That doesn't account for all the businesses that grow around that, and then everything else that other people see about the city, and it attracts them, and they come even though they're not even remotely related to those enterprises. So Vegas is one of these places that continues to reinvent itself, and we grow, and that's part of the reason why I think real estate values will continue to do well in Vegas.
When we were doing our radio show called Talk About Houses, 2005, 2006, we saw the inventory go up, and we called out the alarm that this was bad. 26,000 homes on the market. The length of the amount of supply of homes was the highest we've ever seen. It would have, but now Vegas is a bigger town now. We would have to have almost 40,000. And we still have a quarter of that.
We do. And like I said, you know, to your point, with the number of days on the market, that doesn't indicate that people aren't buying. People are buying homes. The inventory is being absorbed. Is it being absorbed in, you know, before it even comes on the market? No, but it shouldn't be. You know, people should have choices. And I know that I sound that I'm completely pro-buyer, but I'm not just pro-buyer. I'm just pro-consumer in general.
Okay.
I think that it's good for buyers to have choices. I think it's good for sellers to have choices, because sometimes sellers get all these offers all at once, and maybe those are the best offers they were going to get, but maybe they're not, because the home hasn't been marketed long enough. So I think that choice and everybody taking their time and making good choices is good for both buyers and sellers.
When I pulled the data, the thing that shocked me the most was that median days on the market is still super low.
Right.
And that market action index is screeching to a halt, because it did free fall for a few months. For 2 or 3 months, it just started falling. And we were wondering if this thing would go back to 40 or between 30 and 40, which is where it's been for the last decade. And it's got to 44 and it's only at 42.
Right.
So it may like soft landing at 40 or in the high 30s, but that's still a slight seller's market.
Right. So, I mean, I don't think it's going to go below 30. I think it will stay in the 30s for maybe a month, maybe 6 weeks, and then it'll start climbing back up.
Anecdotal information, your personal listings, because that's what you do for business listings. Are they super high price, middle price, low price, and then what kind of like multiple offers? Are they having to wait a couple weeks to get an offer? What's anecdotally going on with that? Just to give them a feel from like an actual agent who lists properties for sellers.
Right. So that's a really good question. So my listings are kind of all over the place.
Okay.
Mostly because I have a few of them, so that kind of gives me a broad range. And what I think is interesting is that the same thing is happening on all of them, which is for the first couple of weeks, there's not a whole lot going on. And then I start getting the phone calls. How many offers do you have? So I think that's an interesting opening question when agents call with that, because when agents are calling with how many offers do you have, that means that they have been looking at properties with their clients and they are running into multiple offers still. So I think that's an interesting thing. We are getting several offers on properties. There is no lack of offers. What I'm seeing people who have kind of been drinking the market is falling Kool-Aid and sending lowball offers. And,
Are sellers just accepting those because they're in fear, or
they're not? They're not.
Okay. So lowballing is not where they're not buying the market crash 40%.
No,
they're not buying that.
And again, look, we're at least the sellers that I have are not in dire straits. They don't need to sell today.
Right.
They have a plan and they're going to stick with it. They're going to get what they feel their property is worth, and that's fine and that's great. And it just doesn't sell overnight. It takes a couple weeks, and that's okay. To your point, the days on the market, that's pretty accurate.
It's crazy that the homes are still like you would expect. If the market were imminently going to crash or whatever, that homes would have to sit on the market forever. And people got all wrapped around one number, the number of changes of list price. But people were still saying, "Oh, I know it's worth $450, but I want to list for $525 because that's how we did it in California or whatever, right?"
Right.
And then they go, "Okay, now I'll drop to $515. Now I'll drop to $510. Now I'll drop to $500. Now I'll drop." So they have 4 price drops, and everyone goes, "Oh my gosh, everyone's dropping their prices," and it's not really as bad as it seems.
No, because the sellers weren't realistic about what the value of the property in the first place.
All right, we're going to do another update September 1st. Okay, which is in a couple weeks. So if you want to see that update, make sure you subscribe to the channel. Also like the video and share the video. You can go back and watch the other market updates we did. We pretty much cover the same information. Of course, you can see on these, we have the slides with historical information. The biggest things I'm interested in are median days on the market, because that really tells you what's going on. The fact that if half the homes are selling in under 30 or 40 days, that's a smoking hot market. And you can see that if you go back and you look at that chart again, it's literally the lowest it's been in 3 years, even though inventory is starting to climb. And that market action index, because that's sort of it's a made up number, but it has a bunch of inputs, and it's sort of a simple way to summarize a whole market. Certainly, some markets in the U.S. are not doing very well. They're having big problems because they were, just bought up too much, and then other markets are still doing okay, but because there's still people moving there, like Vegas, Austin, Miami, places like that.
Right, which is pretty typical.
Nashville.
I mean, we've talked about this a lot. Real estate is not just local, but it's hyper-local. So even within, like Las Vegas, some zip codes do much better than others, and even within a zip code, some neighborhoods do much better than others. This is very normal, and it's part of real estate. So if you're interested in finding out what your property is worth, you might want to speak with your real estate professional about it, because they probably know a little bit more than some of the automated valuation models out there.
Yep. What about the Zestimate?
I'm not going to make fun of the Zestimate.
Not going to make fun of the Zestimate.
I'm not going to do it.
Okay. The A in Zillow stands for accuracy, right? Okay. Thank you for watching the video. Once again, please subscribe, and thanks for tuning in, and we will see you on the next video. Bye.
Bye.